Aditya, Ashish, both of you, thanks for joining in. Morning, firstly. Ashish, let me come to you. It's again one of those very listless, range-bound kind of sessions that we've had at our hands, even though in the second half yesterday, we did have some amount of volatility. What do you think we're headed in for today?
Good morning, Aisha. Good morning, Nikunj. So I think thanks for having me on this show. As far as markets are concerned, I think it's more of a range-bound market which we are trying to witness, where there are a couple of good news in the form of we are seeing very increased GST collections. We have seen in the last 2 months, if you look at the overall government spending, it has gone up by 54% the 2 months. So clearly, we are seeing again the manufacturing, the capex side, seeing very strong signs of stability, and with good monsoons expected, I think the rural income is going to pick up, which will lead into some kind of discretionary spending going up. But despite that, with the kind of uncertainties we are facing with what is going to happen on the tariff side, markets are trying to keep themselves in the very narrow and a tight range, and that's what we call as a very stock specific market rather than a top down approach. Now market is trying to look into individual opportunities within a sector or a subsector where the earning growth momentum is going to be very strong in nature, and that's our belief is also that market, although the structural trend looks very promising, because if you look at from a price point perspective, Nifty has managed to sustain itself above its important averages, whether it's 20, 50 or 200 day. And if you look at the large cap stocks within Nifty, whether it's private banks which are trading comfortably above its important averages, but not showing any strong price momentum at this point of time, clearly indicates that the trend is good, but the price action is not very strong in nature. So all in all, the structural trend looks promising, but where the real opportunity lies is the individual stock bets where earning growth momentum is good. For example, in the capex manufacturing theme, we like wires and cables as a segment, where players like Polycab has been continuously gaining market share. So like in 2019, their market share was close to 19%. Today, their market share has inched up to almost 26-27%. The operating margins are close to 14-15%, and we expect very strong order book to come from the export side. If you look at their FMEG business, which is now turned a bit positive, so a stock which is going to show very strong earnings visibility is trading below 27-26 times PE multiple on a forward basis. Clearly indicates that a strong upside could be seen in a stock like Polycab. Even players within the wires and cable segment like Apar is showing very strong visibility in terms of their order book positioning. So I think these are the individual bets within the wires and cable segment, which looks very promising. If you look at the entire capital markets as a theme, that theme is showing very strong traction, and within that, asset management or private wealth companies, they are showing very strong traction. So we like Nuvama Wealth from the entire basket, where the earning growth momentum is going to be very strong in nature. If you look at the price action, continuously stock is trading at an high top high bottom formation, and clearly we believe that 25 to 30% kind of earning growth is what one can expect in stocks like Nuama or 361. So I think this is one stock within the wealth management output which we are holding in our portfolios, and we are looking for almost 10,500 kind of targets in the medium term.
Aditya, what's your view? How are things looking for the markets, especially with the Bank Nifty and the Nifty?
Morning, Nikunj. Morning, Aisha. Thanks for the show. It's more of a consolidation, I would say. Let's talk about Bank Nifty first. It's turned down from the upper end of a rising wedge after a decent bit of an up move. Bank Nifty did face resistance at a rising wedge closer to about 57,500, 57,600. My sense is it downside there. It might take some support. So if it takes support around 56,500, Bank Nifty could see again a consolidation and then a resumption of the uptrend eventually. Overall, I don't see too much of an up move in the Bank Nifty. Talking of Nifty per se, there too, there's a gap area which it witnessed in October last year, 2024. And Bank Nifty and Nifty exactly took resistance there, and from there it's turned down again. So 25,700 on the upside for the Nifty will continue to act as a hurdle. On the downside, immediate support is where the Nifty actually closed yesterday, 25,400, and below that 25,300. So these are key support areas for the Nifty as well. My sense is markets, both the headline indices, Nifty and Bank Nifty, could enter into a sideways consolidation while you have stock specific and sector specific rotation continuing in the coming weeks as well.